Gentlemen, welcome to the New Year's Stocks to Buy episode 25 live stream. As we're going to be taking a recap of the most iconic moments that have happened over this year from my view. I mean, we're going to be talking about the drama, the prison sentences. We're going to be getting into the stocks that outperformed this year, which actually came as a bit of a surprise. And there's just so much we're going to be doing as you guys are offering some hilarity already down in the comments section. We're going to be printing some attendees hopefully in 2024 as the stock market's currently sitting at its all-time high, which has only taken 2 damn years. I remember last Christmas, New Year's seemed a little bit more depressing, but we've had quite a recovery, haven't we? So we're going to get into this by first and foremost stepping back to probably the year where basically people kind of got what they deserved. I mean, this was one of those years where it's like finally all these people that were just corrupt and just took advantage of the market through like 2020 to 2022 finally got, their sentences kind of served out, at least a lot of them anyways. Elizabeth Holmes, if you haven't watched The Dropout, please God watch this because she's finally serving her 11-year sentence this year. Theranos, that story's gone on for so long, and I can't believe she's only just serving the sentence now. It's like just because you get charged, you don't go to prison for like another year or two. It's kind of hilarious. But then we also saw Sam Bankman-Fried. I mean, this dude, after Kevin O'Leary was backing him up down to the very end, finally got charged. I don't think he's got his sentence just yet, but this is like the year that cryptocurrency, like the biggest names in crypto, finally fell apart. Binance, the CEO stepped down and he kind of just stepped up to money laundering laws because I'm sure his lawyer told him, hey, look, like if you don't do this, it's likely it's going to get a lot worse. And this is also the year that we kind of saw the revitalization of crypto, probably in a more pure light, maybe a less corrupt light. But what was even funnier this year, I thought, was the fact that so many finance YouTubers got sued over promoting FTX. And we all remember this. I mean, this was more toward the end of 2022 into 2023 when it came to all these massive YouTubers like Graham Stephan, Andre Gigues, Jaspreet Singh. I mean, there was Meet Kevin in there as well. And speaking of Meet Kevin, I thought it was funny because he was the only advocate to keep millennial money around after, we all watched Millennial Money before they just banned that in 2022. But Meet Kevin was like, why would you get rid of the channel? He's like, it's good to have the history of what happened on this channel, to only have him flip-flop and completely delete his entire channel this year, which came as a bit of a dramatic surprise as he kind of had this lingering overtone behind like what was going on and the motivation toward why he was doing it. If you guys caught some of that, drama was hilarious. To only bring most of his videos back, but not the ones where he was promoting FTX, not the videos where he was pumping stocks that were basically like went bankrupt. It was really kind of funny how selective he was with a lot of the videos that he ended up bringing back. So this was like such a year of just fulfilled drama in the YouTube sphere. I thought it was pretty entertaining to say the least. We also saw Meet Kevin get banned or basically blocked by Elon Musk after touting and going crazy that Musk is a great visionary and engineer, but probably shouldn't be the CEO of Tesla. And I think he actually ended up getting unbanned, which was quite hilarious. And speaking of probably one of the most iconic like CEO moments, I think any influencer that currently worked on Twitter or has like a big following on Twitter kind of shat their pants this year when Elon Musk obviously had these quotes.
If somebody's going to try to blackmail me with advertising, blackmail me with money, go f yourself.
I love that he, this part right here is the best.
But
right here.
Go f yourself.
Wait for it. Just wait for it.
Is that clear? I hope it is. Hey, Bob, if you're in the audience.
Well, let me ask you then.
That's how I feel. Don't advertise.
Oh, is it not in this clip? Oh, it's not in this clip. Oh, sorry. I should have watched through that. You know where he basically says that, like, if Twitter fails, it's going to be because of these advertisers and history will show. It's just like, it was like watching Omega fall apart. Like, it was almost like, if Twitter doesn't get marketing, are they going to go bankrupt? Like, is Twitter even going to exist in 2024? I mean, this was like one of the most eerie, funniest things I've ever seen. What a calamity it's been over at Twitter. But Twitter is growing. I mean, the metrics are there. It's just they don't have any advertising money come in. So it's going to be probably another shit show on the Twitter front coming to 2024, which will be super fun to watch. On the innovative front, too, with Tesla, we also saw the first accident, I guess, with the Cybertruck on the road, which was barely dented but completely destroyed a Toyota Corolla. That was kind of entertaining in and of itself. We'll see what the ramp up for Cybertrucks look like next year. And speaking of big tech companies, we also saw Apple's first new product in like a decade, basically. Apple hasn't launched a product in I can't even remember how long, and they're finally starting to play around in the VR space. And I honestly don't know how they're going to compete. I bought the Quest 3. I am a huge advocate of VR. I literally use VR for 5 days a week. I'm not even kidding you. I'm obsessed with it. I think it's going to be the future. And I just don't know how Apple is going to compete in this realm when their barrier to entry is a 3,000 US dollar price target, right? I get it with the iPhone. When the iPhone first came out, it was like $200 more than like BlackBerry and some of these other products. But I don't know how you have something like a Quest 3 that's very usable, does augmented reality, a ton of cool crap, but you can get it for $600. Whereas it's $600 versus this $3,000 thing. And I'm really curious if it's totally worth it, because sometimes a lot of things people are doing are mainly just gaming. I don't think people are doing anything serious in VR right now. Meta tried it with the Quest Pro. Quest Pro was a complete flop. They ended up making it super cheap, went on sale pretty quick, and that seems to be the approach that Apple's taking. And it seems more for basically engineers and people that just want to kind of build out apps and things for it, let alone the end user right now. So, it's going to be entertaining to see how this plans out, because it's going to be launching in 2024. So something to pay attention to for sure. We also saw Apple, this was the year that I think Apple really showed that it isn't this truly, I don't want to say like this iconic brand that it once was, but it really showed that, Apple doesn't have like all this control and all this stuff that we used to idolize them for, considering they ripped off the oxygen reader in the new Apple watches, and they basically poached a company's technicians to kind of build their own version. They put them in the patents, and they ended up losing a lawsuit that had them not be able to sell, these Apple watches. But apparently they appealed it. Now they're able to sell them again. But it really shows you how conniving Apple is, down to the very, incremental levels of some of their products, which I found very intriguing. We also saw the new iPhone 15. They stated that they wanted to make them so they were more fixable, but it ended up making them more brittle, and the back screens were cracking on a lot of the, if you watch like Jerry Rig, there's a few, I think, YouTube channels out there that do a lot of reviews and were shocked by how easy it was to crack the new iPhones. I think this is probably one of the worst years for Apple in literally a decade, because Apple's revenues have been falling off. Everything about Apple this year just came as an underwhelming, surprise. So I feel bad, because, I'm sure Apple's going to be around for a long time. I'm not like bearish on Apple by any metric, but it just shows you that, like, this insane, fortress of solitude that Apple built, has cracks in it. It's not like the brand isn't as significant, I think, as it once was in the past. And they're going to have to rebuild that, I think, in 2024. But leading into the most iconic moves in stocks this year, it couldn't have been Apple, but of course it was NVIDIA. NVIDIA took the nation by storm as the best performing mega cap company this year. This year alone, for a company at this size to be trading up 245% is absolutely astronomical, like probably record breaking to some extent. I mean, the rally coming into, let's just see, from 2023, that year to date, yeah, I mean, it was 245, but from those lows that we hit just in 2022, I mean, the stock went up 341%. This is the year that will go down, is the launch of AI. Everything about this year is everything AI. We've seen it in NVIDIA's earnings. Everyone is trying to build up cloud computing and their own, large language models. We've seen so much competition between so many companies, like Microsoft, investing $10 billion basically in ChatGPT. There was so much drama around the CEO of ChatGPT. And and then now there's this competition between like Bard and Gemini and the stuff Google's doing versus GBT. I'm sure if you guys have been using any of this stuff, like I've been using one of these editing software AI programs, which is kind of starting to like boggle my mind quite a little bit here. But we also saw Google kind of doing what I'm going to say like Tesla was doing with the robotics, speeding up the footage to make it look a little bit more advanced than it was, as Google faced some pretty intriguing controversy over the Gemini's videos that it was releasing. And yeah, I don't know, have you guys been using any of these AI tools? Is it kind of overhyped, bubbles? I still think we're in somewhat of an AI bubble, because we've also seen the likes of many small cap AI companies just pump like crazy this year, including the likes of Palantir. So many companies in the AI space that I think are just overly hyped. We'll see if AI can actually sustain itself into 2024, if NVIDIA can kind of keep up this run that it's been on, this insane absolute tear. And one of the coolest things I think we've seen with AI thus far, and I think it's going to be really prevalent in the future of gaming. If you guys didn't see these videos this year where you could talk in these kind of virtual worlds with basically just NPCs that had, these kind of AI bots installed with them. We'll take a quick listen to one segment.
Town? Hey, it's my first day here. Do you know why everyone's so depressed?
Well, New York City can be a tough place to live. There's a lot of pressure and stress that comes with the lifestyle. But don't worry, There are also plenty of things to enjoy and be happy about in this city.
I love your outlook. What are you most grateful for in life? Dude, this is just unbelievable.
I'm grateful for my family and friends. They bring joy and meaning into my life, and I couldn't be more thankful for their presence.
Oh my gosh. What do you think the key to happiness is?
In my opinion, the key to happiness is finding balance in life. That means taking care of yourself physically, mentally, and emotionally, while also pursuing passions and maintaining meaningful relationships.
And what are you passionate about?
Exploring new places and cultures.
Yeah, like this is going to be the future of gaming in a way I don't think we can truly appreciate just yet. But this is some wildly intriguing stuff, and we also got some really intriguing plays into with the GTA 6 trailer that finally dropped after a damn near past decade, and we still got to wait till 2025, but we can even live that damn long with the way the world's going these days. God, it's crazy how long we've been waiting for the GTA trailer, and even I had a lot of friends over the holidays even talking about the investment ideas behind how big GTA 6 is truly going to be, as not only was it the first trailer and basically video on YouTube to break every record, smashing out Mr. Beast in a single day. I think they had 94 million views on the trailer, even after it was leaked earlier, and they forced them to drop it earlier than they wanted to. They still broke insane records. And, it was also the first game entertainment thing that dropped like over $1 billion in a single day in sales when it came out. And I think what year was that? 2013. So it's very anticipated that with Take-Two Interactive here, and I don't know if I'm going to ever play this because we got to wait for another 2 years, but I cannot imagine that game release is going to double the sales of this company, if not triple them within a quarter or two. I think it'll be one of the most iconic drops in history and entertainment, and I think people are largely under anticipating the impact that game is going to have on the entertainment industry in general. But I do want to switch a little bit now and talk about awarding, I think, the funniest YouTuber gains this year. This is the year where we've seen YouTubers come out and gloat about their returns in the market and completely forget about all their losses through 2022 and 20, like coming out of that crazy crash and small caps getting devastated. I feel like that was the year we saw how much people didn't understand what they were doing with their investments. And a lot of people owned up to it. We saw the likes of Jeremy from Financial Education, true transparency there. I got to give respect where respect is due. And transparency is the only thing I give 100% respect towards. A lot of people tend to avoid it. And I want to give out the award this year for probably the dodgiest performance charts. And that has got to come from Everything Money. If you guys watched Everything Money, they did a fun little portfolio reveal here, and they kind of left out a lot. They left out a ton of details in their portfolio stock reviews this year. And you guys were smart. People aren't dumb. And I love the internet because the internet isn't dumb. And they started pointing out, not only did this gentleman here, Paul Gabriel or whatever his name is, he was saying that he can't show his returns because his lawyer said it would be a bad idea. So he's like, I'm never going to show my returns. Yeah, here we have a video of him showing the stock returns of his picks this year. But the funniest thing about these picks is he didn't talk about his short on NVIDIA. Like one of the biggest things was him shorting NVIDIA this year. He didn't talk about the wash sale that he took in Alibaba at the end of last year. It's like, so he's lying about his total returns on Alibaba that he's saying he's down 7% on. Like there's so much convolutedness into him showing returns. And a lot of people pointed this out. The lawyers not allow you to share when your portfolio is up. BABA and my other stocks were used to offset the gains this year. That's why he is only down in one. Like, you guys are really smart, and I just thought these comments were absolutely hilarious. He's like, I love your channel. I don't know why you criticize Jeremy when he shows his portfolio on Fidelity, so there's no question about his positions, whereas there's multiple comments asking for more clarity. And it just goes on and on. He's like, I expected a short position on the QQQ and NVIDIA in Paul's portfolio, lol. They reply, oh, well, it's just so ridiculous here reading some of these comments. And I just love how non-stupid people are. I mean, you always feel like most people that watch these videos are probably dumb. They're not commenting. They're making stupid investment decisions for themselves. They're the people that, like, you never hear about the people that lose money. For everybody that gets 1,000% gain, there's somebody on the other end of that stick getting absolutely wrecked. And I like to believe Paul is one of these people that got probably more devastated this year than he is showing on his rates of return, because I don't know how much he was shorting NVIDIA. There was a lot of drama about his brother. They were managing their dad's portfolio. I think he passed away. They're like these hedge, like, I don't know, they're, what do you call them? Trust fund babies. And basically his brother, like, he hinted that his brother wanted to leave letting Paul invest for him. There's so much drama around this channel because they're so untransparent. So they get the award of the year. of God knows what their actual returns are for somebody that sells you products and trying to outperform the market and pick individual companies. Got to be transparent when you're selling products, folks. But taking a look at the markets, let's talk about the stocks that did the best this year, where we actually ended up, because it was a bit of a surprise for how bad inflation's been, for the pausing of interest rates. We have finally seen and are finishing the year. We'll see if we can hold at an all-time high on the S&P 500, which last time this was peaked, and it's crazy to think this was on December 31st of 2021. That was the last peak of the market, which was basically to start off the new year in 2022, which was the worst year any of us had ever expected, to only lead in to finally coming into the new year of 2024. So maybe this is a good sign, or who knows? Nobody does. But let's take a look at the stocks breakdown. We know Nvidia crushed it this year, but if we take a look at the S&P 500 heat map, it was a year for the rebound in tech for sure. Meta, I think, came in second place for tech cap, gains. I mean, Meta went up a whopping 206% from its lows. That was probably one of the greatest recovery stories of the year. I mean, we saw Nvidia chips in general crushed the market this year. We saw some good gains, even Apple, trading up 50%, but a lot of the smaller cap companies in the lower end of the S&P still sitting at relatively wrecked territories. I mean, probably one of the worst stocks we saw this year was Pfizer. Pfizer's down 43.3%. A lot of issues going on with them getting rid of, I think some of their patents expired. The fact that people aren't getting, the pandemic vaccines like they were. So poor Pfizer there. And that was a stock that I actually used to hold. And as many of you might recall, coming into the crash of 2022, I think that first quarter of 2022, when I sold all my stocks, I actually held Pfizer. I took all that money and I put it into SCHD. And I'm really glad I did that, because SCHD has been performing a lot better than some of the individual US dividend stocks I was holding in my RRSP. Though we've seen some, pretty lackluster performance out of things like Coca-Cola and Pepsi. So there's a lot of speculation coming in the next year of what people should be focusing on. And we're going to get a good highlight of what we should be focusing on from one of the most iconic investors, Tom Lee, that really predicted a lot of this. We're going to get his prediction in the 2024. But I do want to point out that you want to really be paying attention to the sectors that got wrecked. I don't know how well tech can perform next year. Something tells me we could still see some pretty good gains, but we're getting into some expensive territory. And I feel the lower half of the market hasn't really kind of justified a lot of the growth yet. Because you look at some of the bank stocks, JP Morgan was an outlier. Bank of America has still been flat. Berkshire didn't do a whole lot of growth this year, and Berkshire's kind of becoming an intriguing play in and of itself. Home Depot up 10%. Tesla did fairly well here, up 120. McDonald's, a lot of these stocks, even though you can see them in the green, this is just from the beginning of the year, right? So we're not seeing the true recovery from the bottoms of these stocks, but I feel like we have a lot of room to go on the bottom half of the S&P 500, which still trades at a very favorable valuation. Same with SCHD, right? Trading at some pretty favorable, around 15 times multiples. Right on the Canadian side of the border, obviously being a lot lackluster at best. I mean, we're only talking about being up 7.7%, which when you tap on a 4% inflation rate, this is absolutely abysmal compared to the absolute 24% bull run the US markets have gone on. And taking a look at the heat map here on the Canadian side of things, one of the best performers still, surprisingly, is CNQ, which has been in like one of the craziest stocks here in Canada. And it took me a little bit of research this year to find out it's because Canada is trying to build a powerhouse of a natural gas shipping plant, basically. And CNQ has the largest natural gas reserves of pretty much almost any company on the planet, as far as I can tell. So it's been leading to a lot of growth, even against the backdrop of CNQ losing a lot of money this year. I think their earnings and stuff have dropped off pretty dramatically with tech companies. And I actually know somebody I was talking to yesterday that works for Constellation Software, Canada's second largest tech company. And even like listening to him talk about it is quite intriguing. These tech stocks have been on a frigging tear this year, which is, again, really intriguing to say the least. This is like the year of tech recovery. But I think Shopify, it's got a long way to go but before an all-time high. But if you haven't seen Constellation Software, check it out, because it's been just one of Canada's best performing stocks and is pretty much at an all-time high. But if you take a look here, let's listen to Tom Lee. We're going to get some predictions on 2024, and then we'll get into some of the comments here and see what you guys have going on. But let's just take a quick listen. This is awesome. Tom Lee's a champ.
Actually, the best way to do that is like, well, should the FANG multiple come down next year, right? So you do a sum of the parts. And why should the FANG's multiple decrease when they're going to grow earnings 25%? I mean, in a way, you'd actually argue the market has more upside if FANG holds its multiple because of the earnings growth they're going to have. So I think people trick themselves into think the market's expensive, but it's the same as someone saying, oh, because the S&P is expensive, Japan's expensive. It's not. They're you're buying equities, but you really want to think about each component you're paying for.
I want to talk about your small cap call because that's a big one. 50% next year. We've certainly, if that happens, had a preview in the last few weeks about the comeback in small cap. Why do you think there's so much room left to run here?
Well, I think people need to put a long-term lens on small caps. On a price-to-book basis for Russell, which is the highest correlation to forward returns, relative to S&P, it's at the 1999 lows. You've never seen them cheaper. 1999 was.
That's always the case for small caps. Is that they're cheap?
It's the first time they've touched these levels in almost 40 years. So, but in 1999, that was the launch point for 12 years of gains. And if you look at the earners of the small caps, which is like the S&P 600, they're at 11 times forward earnings. So, can the multiple expand in small caps if we have weaker dollar, PMIs turn up? Yeah, I'd say easily. Can the earnings go up a lot? Yes. And small caps this year proved it. We turned bullish on small caps around November, and people thought maybe it's just to base it up 5. It's up 25%. I think small caps could easily add 50 percentage points next year.
But can small caps rally when large caps are not rallying, when tech is not rallying?
There's a lot of precedent for that. Like 99 to 2003, you had a pretty vicious bear market. Those were some of the best absolute return years for small caps.
Small caps long term tend to outperform big caps. Value tends to outperform growth. It just doesn't happen in our recent memory that much. Wouldn't that be something if that happened?
Yes, and many are skeptical small caps could work. Most think it's a tourist trade, like they want to maybe own it for a couple months. So the less likely outcome is they do well the entire year.
Right. And I know you expect a little turbulence in February, right? March?
Yeah, yes, I'd say if history was sort of your guide, January, February, S&P gets to 5,000. I mean, I think new highs is just a matter of days. But then the late Feb, March, April is when you get the 5-10% drawdown.
And then up from there.
Yeah, and then up from, but that's the big growth scare, and so everyone will panic, and that's probably the time to be buying again.
Very interesting predictions here, right? So I'm sorry if it was a little quiet. I maxed it out. I noticed it seemed to be incredibly quiet. And a lot of you are asking too, like he seems to be incredibly bullish on small caps. I notice a lot of people are incredibly bullish on small caps because, again, it is the cheapest valuation in the Russell 2000. If you're intrigued by small caps, there's a lot of good ETFs out there like Vanguard Small Cap Value ETF, tickers VBR. A lot of good companies in here. And I honestly, I'm actually shocked because a lot of the really pronounced small cap ETFs are actually sitting at an all-time high. And the valuations are still really good in a lot of them. I did a full breakdown on some of the small cap ETFs, I think, a week or two ago, and it's something worth checking out for sure. When it comes to the S&P 500, I'm very intrigued to see what actually happens because there's so much debate around valuation. And I told you, valuation will always just follow one thing, and that's earnings. Now, we're getting a little bit extended, but when companies like, if we take Meta, for example, I mean, if you just look at Meta, revenue on macro trends, the whole reason that the markets have been sustained so well is because of this epic return in revenues, right? Because we went through basically a whole year where revenues were completely flatlining, and now coming into this next part of the year here, right? Like we're starting to see positive revenue growth again, where Meta's growing at a 23% clip. However, and this is my big caveat to if next year is going to be a true growth year, it is going to require growth to continue to grow at least somewhere in the teens. We need to get 10 to 20% growth rates because I find it really hard to believe that we're going to see 20% growth rates continued. And the reason that's hard to believe is because to see this big jump of 20%, it's coming out of a year where there was no growth. There was like negative growth in revenue for a lot of companies, big tech companies, right? So when you get a year where all of a sudden, or a quarter where we jump up a lot, it's only being compared to the year prior. And when the year prior was down, it's easy to see a 20% jump, right? You get one, because we're not like jumping off, like if you go back over a year ago, like we're not 20% off where the revenue numbers were here. We're 20% off where the revenue numbers were at the bottom. So until we get another 2 quarters where we can see really good revenue growth picking up beyond what we're seeing this quarter, and NVIDIA is a good exemplifier of this. Like NVIDIA is growing at insane clips quarter over quarter, like 50% quarter over quarter. But on a yearly basis, 20% sounds astounding, but it's not because we were down so much in revenue. So we really need a good year of getting into interest rate cuts. We need a really good year of the economy remaining sustainable and seeing continued revenue growth in a lot of these big tech companies. And we could very likely see another insane growth year within the market. Now we can maybe talk a little bit about what, again, you guys have seen what I'm going to be buying. I'm going to be dumping all my money into my tax-free savings account. Probably if I don't have access, if the money hasn't settled by Monday, it'll be Tuesday for sure. We'll probably do a full video on what I'm buying, how I'm buying, because just like you guys, I'm looking at small cap ETFs. I'm looking at things like Google. Still going to be buying the S&P 500 pretty aggressively, and probably some of the Canadian banks. Just trying to figure out how I'm going to diversify that, or where I think lump summing might be the best. I'm just waiting for Canadian real estate market to crash. This is a fun debate, right? When it comes to real estate crashing, especially in the Canadian economy, which everyone's been saying it's a bubble forever, you have to keep in mind that over 20% of real estate in Canada is owned outright. So your boomers, your parents, those are the people that have most of their wealth within the Canadian real estate market, and 20% is completely cushioned from seeing any real volatility, right? It just comes down to the supply and demand at that point, and how many people can afford the renewals on their mortgages. And as mentioned, if you look at bank earnings, which if we saw real estate start to crash, it would definitely bring down the entire banking sector with it, because obviously the banks have been giving out crazy mortgages to people, but I think they're justified. We're not seeing default rates on renewals like we saw even during the pandemic. During the pandemic, there were higher delinquency ratings, and there still currently are. Now, keep in mind the delinquency ratings are going up. They're trending upwards, but we still got quite a ways to go before we're even at pandemic level like delinquencies. Now, the question too is how many renewals are coming up this year? Is it, you'd have to do a lot of math, because it's not like all these renewals come up at once. And if most people can survive until interest rates start to drop, their renewal might not be that bad either, right? So much convolutedness behind the Canadian real estate market, which is why we tried to purchase. We'll see. Obviously, my net worth, or a lot of our net worth right now, is tied up in a condo. If the condo crashes, the market crashes. That'll be a video. That'll be a video. The Canadian real estate market finally crashes the year we decide to buy at all-time highs at 5.8%, 6% interest rates. That'll be the video the day that happens on this channel. It could happen, but at least my expenses are coming down and not going up, because the rent here is nuts. Banks, and more banks, like Pokemon cards, just collect them all. Just the flippers. I only need to find one. Yeah, that's true. Bank of Nova Scotia looking juicy, added more. I believe this might be the best quarter for Bank of Nova Scotia, because the new CEO that stepped in, made a very good point that this is the year that basically they want to have a good turnaround. So they lumped a huge amount of loan loss provisions to preemptively get ahead of it. And we saw this with two different banks. And I'll give you a quick little example here for those of you that are intrigued by some of the bank stocks. First and foremost, you'll notice that one of the best running stocks in the Canadian banking world at the end of the year was Canadian Imperial Bank. Why was that? Because they didn't have to put as many loan loss provisions aside in the last quarter. So when they posted their last quarterly earnings, this thing shot up, because people were expecting a lot less from their EPS, but because their loan loss provisions started to level off, they shut up. Whereas Bank of Nova Scotia said, hey, we just want to put a lot of loan losses aside so we can look at the next quarter to be much more, better for us. We can get more earnings out of it. And we saw a bit of a rally, but nothing like we saw out of Canadian Imperial Bank, right? So this is going to be one to pay attention to. I think we're going to see some steam in these stocks if we can stop dealing with the insane amount of loan losses. And we're still getting a 6.5% yield. As mentioned, 7% yields never last, because these banks have such good payout ratios. I told you it was probably the buying opportunity of a lifetime here when you get into these crazy yields, but I still think 6.5 and where we sit is pretty good. ZEB is great. Canadian equal weight bank ETFs. Yeah, you can look at HBNK as well. That one actually isn't even charging a management fee until July of next year. Really good bank ETFs to check out. Or again, if you don't want to pay any management fee, you can also just buy the 5 largest Canadian banks. A lot of ways to invest in the Canadian banks, but probably the best sector, because I think if we take a look at ZEB real quick, the total rate of return coming out of crashes with these Canadian banks, I think people forget the resiliency of how well you can, they're the only real stocks, I think, outside of the railways in Canada that are actually worth owning. Because if you look at ZEB, which is the Canadian Equal Weight Bank ETF, and you look at the 10-year rate of return, or since basically they're all-time here, and you go back to coming out of the financial crisis. So during a crash of 2009, if you bought this, you would be up, your $10,000 investment today would be worth 40 grand. Just a mere, 15 years later? 15 years just owning the Canadian banks. And even if you bought during the pandemic, I mean, you could have picked this up. $10,000 investment would have only been worth, can we take a look from the pandemic? Can we zoom in that far? Would 3 years be a good time frame? I don't think that's a good time frame. How can I see? Is at the bottom of the pandemic, 2020? Yeah, I guess that's not bad. I mean, you'd still be up, 13, so a few $1,000s. I feel like you should be up more than that. And typically buying these on these crashes tend to yield like pretty insane returns. So the banks, anytime they dip, they're always a buy. No one's really complaining there, right? Better to own the individual banks versus the ETF. Yeah, to some extent. I think H Bank is a good one because this ETF specifically charges a massive fee on it. But I honestly think next year is going to be the year for recovery in a lot of these under half stocks that just didn't see as much as tech did this year, just because I think things will start to nominalize a bit. Maybe it doesn't. We haven't gotten into an interest rate cut cycle yet, right? And that's what we have to wait for. Unless the market is priced in a lot of that already, we might not see a whole lot out of the first half of the year, just with the REITs and a lot of these banks and, debt-based companies and infrastructure companies. So we might be waiting a little bit longer, right? ETF is just easier, and Quest Trade, no commission. Yeah, I mean, by all means, just do whatever works for you if you're interested in buying the Canadian banks. CNBC analysts are putting price targets at 5,500, which was a dramatic pivot from the lows they were putting on the market just a couple months ago. You go back a few months ago and the negativity and the bearishness, and now all of a sudden everyone's positive because that's what sells. I did a really good video talking about, the clickbait and how bad it was coming into the beginning of the year. Go back to the beginning of this year and look at all the damn predictions analysts had, and it really shows you how clownish and terrible listening to analysts are. You just buy and you always buy. It doesn't matter what you're buying, just diversify and buy. I'm down like 30% on Pfizer. Good golly, man. Yeah, Pfizer's a painful one, man. It could be a good buying opportunity here. I think Pfizer, let's take a look at the Pfizer stock real quick. This is probably one of the more intriguing plays going into next year, probably as well. It just really depends on how they can turn their earnings around. I don't know enough about it, but I mean, Pfizer's trading at levels right now it hasn't seen since, when was the last time it was this low? I think you'd have to go all the way back to literally 2013. Wow. Look at that epic rise and fall, man. This just shows you how volatile stocks can really be. From an all-time high to like decade lows, literally within 2 years. Unbelievable, right? But yeah, you never know the volatility. This is one of the big issues with biopharma and how cyclical some of these things can be. What's your thoughts on psychedelic stocks? Stocks going into 2024. A lot of these companies are going to phase 3. Yeah, I think if they get into phase 3, I think that's when buyouts start to happen. I haven't looked into things like MindMed in so long. There's a lot of the companies didn't make it, actually. A lot of these psychedelic companies weren't able to survive the recent market environments. I'm actually surprised MindMed's still holding a $200 million market cap. But if these things work out, the big problem right now is like we've lost so much value and dilution over time because these companies, they don't make money. They have to raise it through stock-based, just basically doing private placements on the market. But the big problem here is if you bought up here and you're holding, like you're screwed. Like even if this thing gets bought out, you're never going to go back to in the pre-split era here of $68 a share. Like that's not going to happen. I mean, can you imagine going from $4 to 68? Like on a buyout, that means this thing would be worth like, I don't even do the math. What's 68 divided by 4 and times that into the market cap? I mean, you're talking probably about tens of billions of dollars. We're never going back to this era. So if you're interested in psychedelics, this might not be the worst place to start picking them up. Nobody cares about them anymore. And there's probably going to be some good buyout potential considering some of the results we've already been seeing in phase 2s. I'm down like, what else we got here? Tom Lee nailed this year again. Yeah, I like Tom Lee, but I only like him because he's optimistic as hell, but he's been wrong a lot too. But I love the way he's kind of getting his praise because I believe bulls should always get praise. People that always encourage people to buy are the people I want to listen to. I don't want to listen to people like Everything Money that are always negatively, bearish on the market and then also try and tell you to cost average. Like you should always be bullish because I'm always a glass half full kind of a guy, and it gets you a lot farther ahead in life than being negative. Oh man, I'm never going outside again if I can have a meaningful conversation with an NPC. I know, right? Exactly. Just talk with the bots, man. The NPCs. That's going to be the new era. Wait till it gets into VR, man. You're going to be talking to. You're going to go into the bar and picking up NPC women. It's going to be great. My tech plays just the Nasdaq ETF. Yeah, that's the big debate, right? Like I still kind of like the fantasy of outperforming the markets like I used to and picking individual stocks. But at the same time, like, you always kind of redundantly come back down to the idea of just picking like 4 ETFs and just cost averaging into them and just kind of diversifying where like the best value you think is like in small caps right now. And you'd probably get some pretty good outperformance doing that. Is AI this year blockchain? Yeah, blockchain came back a lot this year though, right? I mean, it's kind of surprising to see Bitcoin over 40,000 this year. So congrats to all the cryptocurrencies players out there. I honestly blown away. I never thought crypto would come back as fast as it did. But it's very volatile and it's very speculative in nature, so just be very careful. Same with AI. I honestly think most AI companies are about to get wrecked. So I don't trust it. It'll be neat to see what the next big trend is next year. And we'll see if Nvidia can keep up, but it's going to be interesting to say the least. There's always some unexpected rise and fall of something, right? The Joe interviews can process the idea. Someone's bribed by shekels. Log comedy gold. What else we got here? You guys got anything else going on before we finish up into the new year? A lot of you guys asking about some of these REITs. I'm going to do some individual videos on REITs. I know a lot of people have been asking about RioCan and some of these Canadian REITs and if they're worth buying, some of these US REITs. You guys were so funny at the beginning of the stream. It's the LCBO still open. Somebody said that, where was that comment? The guy said, if you're on Yonge and Shepherd or Eglinton area, you said the LCBO is on you this time and some Oreo McFlurries. Is that what we were getting into here? So damn funny, man. Anyways, let's finish up with one or two more comments. RioCans, the Rio Clan, baby. I think alternative asset manager stocks, REITs, and banks will do great this year. Yeah, the good old McFlurries, man. VDY is solid for sure. Yeah, I've been using VDY as a Parker placement for now. I'm not sure if I'm going to buy it back right away, or if I'm just going to start buying some of the more focused Canadian banks now that I can actually get in my TFSA. It'll be neat. I still like VDY. It's a good income earner, but I feel like just concentrating a bit in the banks that I think are more suppressed might yield a bit better results next year. VDY has the gift that keeps on giving. Yeah, I mean, did it not hit? Did VDY give us record dividends? Like, did we hit a? Let me take a look here real quick. I'm curious because I know SCHD gave us a record dividend this year, which was super cool. But did VDY hook us up this year or what? Let's just take a quick look. Did we get any kind of like record high dividends? No, it looked like it was. Let's just take a look at the 1 year here. Yeah, and that's been pretty flat, even though the next quarter should be pretty good because we've got dividend increases across the board, right? I think most of the banks increased their dividends. TELUS increased its dividend. Like a lot of the big Canadian stocks have increased their dividends. So next year we should start seeing hopefully some records at a VDY, which would be super awesome. Yeah, 7,000 TFSA run, by the way, people. They increased it again, which was super awesome. Plus, you should also be maxing out your FHSA account because if you don't use it within 15 years, guess what? It's just extra contribution room to your RRSP. So FHSA, man, be maxing out those accounts, baby. And let's look forward to a phantasmal and hopefully just as entertaining and interesting 2024. And pray to God you don't do anything stupid and blow up your accounts. Because I don't like seeing anybody do absolutely abysmal crap to their accounts. That's why we try and be as transparent as possible here. That's literally the first thing I do as soon as midnight hits. I do agree. It's the first thing I try and do, except I have like $160,000 worth of room, and I don't know how to max it out. I've got 6 figures sitting in my corporation, and I can't even pull that money out because it'd be taxed out the yin yang. So I'm kind of just going to figure out what I can do to just start contributing as much as humanly possible to that TFSA account. So it'll be fun. Do you think 2024 will be the year for those MJ stocks to come back? Absolutely not. I think most MJ stocks are absolutely wrecked. If you ever walked into one of these MJ stores that are on every block in Toronto, you know how competitive that is as a nature. There was like 3 grow ops out where my parents own their farm, and all of them basically went under. MJ companies, even if they legalize in the US, there might be some hype, but avoid it like the plague. It is a highly unmoted business. Everybody and their grandmother in Canada is allowed to grow it. It's almost impossible to pick a brand that's actually, there are I've seen some MJ companies that have been doing well, but honestly, if you're going to invest in it, go up north where there's no competition and there's like one store supplying like an entire town and invest in that store. That's the only way I think there's going to be real gains to be made in the MJ market. I would avoid the green stuff like the plague. I mean, the best investment you could have made was in Constellation Software because that hedged you against the crash of it all. And Constellation Brands is basically is at an all-time high, isn't it? So, I mean, if you want exposure to the MJ market, do it through a third party because, yeah, I mean, Constellation's done very well over the last 5 years, and they basically own Canopy. But look at what happened to Canopy, right? Canopy growth has died. It's an absolute shame, but like we're talking about abysmal returns. Do they just do a reverse stock split? How's it $6? I thought it was in the pennies like literally a week ago. You never buy companies that are residually doing reverse stock splits, man. You should be a little worried by that. Yeah, it's super funny. RioCan says they charge companies more for rent because of the risk. Yeah, exactly. There's huge risk in it, man. It's a highly competitive market. Happy New Year, all. Hope 2024 is awesome for everyone. Cheers. I love the local dispensary airport pod on Mount Pleasant. Yeah, for sure, man. But yeah, go get yourself some of those MJ products if you live in Canada, man. It's legal. Unlike the US. If you live in Canada, you get a lot of benefits on that side of things. But again, wishing everybody a super happy start to the year. Go spend some time with family. We're going to bring in the new year just chilling and starting probably on Monday or Tuesday by topping up the accounts and showing you guys what I'm buying. And we'll see if we can outperform the markets next year because this year has been a bit boring for me just owning indices. I think I'm going to do an update on my fiance's portfolio because I think she crushed me this year just owning things things like Meta. But yeah, Happy New Year's, everybody. I appreciate you stopping in, and I'd love to let me know what you think in the comment section below is your most iconic investment moments of the year. What were your best trades? What did I miss? What did I not talk about in this stream? I always love catching up with you guys. So stay cool, stay awesome. And as always, I look forward to catching the next one. Peace.